Coming up on the SBS On The Money podcast, just how big were the Black Friday sales? Star Entertainment running out of cash and gold still shining? All the details next. Hi everyone, it is your daily 10-minute business and finance news wrap for this Thursday, the 9th of January 2025. The Australian share market fell today, the S&P ASX 200 off by 0.24%. We'll have the details with Zoran Kresovic from Blueberry Markets. But first, to retail sales. And shoppers would have noticed that the Black Friday sales stretched across the entire month of November, not just the Black Friday weekend. And today, the Bureau of Statistics said retail sales rose 0.8% in that month, the most in nearly a year, to a record of just over $37 billion. Discounts were seen across clothing, furniture, electrical goods and cosmetics, along with essential goods. Still, the industry warns it may be a tough time for many as they compete to attract a more savvy shopper. For more, I spoke with David Rumben, the lead partner at Deloitte Access Economics. David, first of all, to what extent were the Black Friday sales a success?
Look, we've seen the November retail sales results for the month, up 0.8%. You'd have to say that's a strong result. We've seen a lot of categories do well. Furniture sales up over 2%, department stores and clothing both up over 1.5%. So in a month, that's a strong result, and you'd have to say retailers are probably going to be pretty happy with that.
So it's a record sales result for the month, I think just over $37 billion. But how hard are retailers having to work to attract customers? Because there have been some pretty big discounts across all sectors, right?
Absolutely. Yeah, we know that discounting has been underway. We suspect that a lot of the sales have been discount driven. Certainly consumers are looking for value. And we know that the retail environment has been in a pretty poor state leading up to this. Now, we've had both September and October were reasonably good months for retail. We've now had a strong month in November, but it's coming on the back of 2 years which have been pretty tough for retailers, where we've seen sales essentially go backwards in real terms. So the environment's not been good. They have had to discount, but it's now starting to pay off with sales starting to lift.
Okay, so if consumers are becoming more cautious or more savvy and waiting for discounts, because we know that their shopping patterns have been changing over the past few years, we know that these Black Friday sales, they don't just happen during Black Friday, they now happen for the whole month of November pretty much, right? This type of heavy discounting, the promotional activity, can it continue?
Yeah, look, in part it's been because the retail environment has been so challenging that retailers have had to cut their margins. So we've seen retail profit margins pretty poor. We've seen a lot of retailers didn't actually make it to Black Friday. We've over 1,000 retailers went into insolvency over the course of the year up to September. So it's a tough environment. So that suggests it will be hard for it to continue with such price discounting. What retailers will need to do is try and get value through their supply chain. So get price discounting through the goods that they purchase, try and operate their businesses more efficiently, looking for productivity improvements. That's the main way that it can go on. But otherwise, there is pressure because profit margins are tight.
So overall, what does it say about both the retail sector at the moment, retailers and the consumer?
Well, it suggests that the consumer is starting to come back. We've had 2 years where consumer spending has been very subdued, particularly at the discretionary end. And so that's affected retailers, that's affected their profit margins. That's why we've seen a higher rate of insolvencies. The past few months have been stronger. We know that tax cuts have been a big support to that, and real wages are starting to grow as well. We saw that when tax cuts were first delivered, a lot of that money went into savings. I think what we've seen through November, triggered by the Black Friday period, is that some of that savings is now going into spending. So we're seeing a stronger retail environment, but it's still not as strong as it could be. It's still only 3% sales growth over the past year, which is not by any stretch a really buoyant environment. there's still potential for it to improve further. But we're starting to see the signs of that. Consumer confidence is lifting. We're kind of getting up off the floor in terms of retail.
And what do you think the Reserve Bank will think about this, especially in the context of we saw inflation, that underlying rate of inflation slowly coming down yesterday, that monthly indicator anyway. When the Reserve Bank comes to meet in February, will there potentially be a rate cut, or the fact that the consumer's starting to spend again, will the RBA be a bit nervous to do it?
Look, I don't think this data will get in the way. In part, people will also see that this spending in Black Friday possibly also partly a bring forward from spending that might normally have happened in December in the lead up to Christmas and in Boxing Day sales. What's going to be more important for the Reserve Bank is the inflation data that you just mentioned. The fact that underlying inflation is edging down. We saw that data yesterday. What's going to be really important is the quarterly CPI report out at the end of the month. That will be the deciding factor, not so much how much consumers are spending.
That's David Brumbins there from Deloitte Access Economics.
Now, Market Day on the SBS On The Money podcast.
The Australian share market fell today. The S&P ASX 200 off by 0.24% to 8,329. For more, I spoke with Blueberry Markets analyst Zoran Kresovic. Zoran, shares are down today. Why?
Well, I mean, Ricardo, we had 5 days of upward trend happening on the ASX 300, and today it seemed to be a bit of a breather, obviously, especially given the fact that obviously retail sales came through at a lower than anticipated level, but higher than what October consensus was, or in fact lower what the consensus was for the month of November. So I think it's got a lot to do with obviously data that came through yesterday. We had the monthly CPI that came through at 2.3% year-on-year basis on the headline figures, but nevertheless, obviously, it was actually down on core mean at 3.2%. So market is actually readjusting itself. It's all to do with the interest rate decision that's coming through in the month of February, and we're taking a bit of a breather at the moment with ASX 200 actually hovering around those levels, support levels that are key ahead of actually more clarity that's going to come through at the end of the month.
We went into the retail sales in a bit more detail with an economist earlier, but those retail sales data, how exactly has it impacted the market, the retail players, and does it shift the market's view at all in terms of the first interest rate cut from the RBA and when it will come?
It's a great point that you raised. I mean, look, in the overall scheme of things, given the fact that obviously we've got the quarterly CPI data that's actually due on the 29th of January, I think for every investor or trader that's actually trading the Australian stock market or trading Australian dollar should actually consider to pencil that in, because it will be a key event or marquee event of the month as well. I think based on that, we will probably get a lot more information whether the market will reprice that 25 basis point cut. Nevertheless, retail sales are important as well, and given the fact that obviously numbers came in lower than what market was actually anticipating, it is adding extra layer of concerns. Seasonality aspect actually came into effect in November, because more and more investors or actually buyers are actually focusing on the fact that Black Fridays. So we've actually seen that kind of shift over the last couple of years from December to November, and the number actually came in weaker. So for the month of December, we can probably expect numbers to actually decline even further, and if the house consumption and disposable income is actually hitting the investors with interest rates being so high, then we might actually get RBA to act on it quickly.
We talk about gold. It's moving up at the moment, and we spoke about it yesterday too. What's your take? Why?
Well, gold has been actually a big hedge against the risk. And in fact, actually, aside from the tech sector and NASDAQ and S&P 500 in US, has been probably amongst one of the best performing, sectors across in 2024. So gold has actually appreciated 27% for 2024. Banks in the US are actually focusing or calling for 2025 to be another bullish year for gold, and in fact actually to reach $3,000 per bullion. So quite bullish. I think we need to understand that whilst the inflation is actually coming off across the globe, we're actually seeing a lot of central banks actually cutting the rates. We also have geopolitical risks that are still heavily playing within the world, and not only that, we've also got a whole heap of fiscal stimulus that's coming through as well. In regulation of Donald Trump on 20th of January could actually cause a bit of not, I shouldn't say concerns, but should actually make markets a little bit nervous and jittery, which could elevate the level of volatility. Tariffs are also playing on our minds as well, especially focusing on China. And if you bake all this in, then we definitely, as investors should be looking at actually gold as a hedge against the risk. And I think that's what's happening right now. Everyone is kind of positioning themselves to actually diversify their portfolio in order to actually provide as safe investments as possible and hedge themselves against any potential downside.
So while gold is up, if we look at the market today, one company that hasn't been doing well, one of the worst performers, is Star Entertainment, the owner of Star Casino in Sydney. What do you know of it?
Well, I mean, looking at the share price, it's actually tremendously bearish and it's actually at all-time lows. So looking at the chart back from 2012, we can see that the stock price has actually hit around 14.5%. Over the last 12 months, the share depreciated approximately 97%, which is actually fairly bearish. I think with Star Entertainment, there is obviously a lot of concerns. Q4, the cash burn has been at 107 million. It looks like actually they've only got 79 million in the bank right now. So the cash flow and balance sheet is a major issue. And also we need to take into account the regulatory aspect as well. So from the regulation perspective in the industry itself, it's becoming quite challenging for them, not to mention they've also got a 100 million loan facility that actually they have to service and pay as well. So if you bake all this into the price, we can actually see the Star Entertainment is actually in quite a lot of trouble as well. It's actually not looking good for the shareholders. And we might have implications of government stepping in or other possibilities to actually try to get the company out of the woods. But it's not looking really good at the moment. It's looking fairly negative. And obviously, they've got to act on it quite quickly as well.
Okay, so let's go to the other side and talk about the opportunities for investors at the moment. Where do you see those?
Well, as I mentioned previously, Ricardo, I think, hedging yourself against any potential downside risk is actually important, especially in a year where we are obviously seeing inflation coming off. However, there is also a talk of prolonged, in reinflation actually coming onto the books as well. So we've seen last night from the FOMC minutes that US will actually continue to monitor their, data quite closely, and obviously potentially prolonging any further interest rate cuts in the near future. So as I mentioned previously, gold is actually looking like a good hedge against the risk, potentially to protect your portfolio. But I would not discount obviously the tech sector as well in the US, because looking at NASDAQ, it's outperformed all markets across the globe with 20% return. And lastly, ASX actually, at ASX 200 as well. ASX has actually performed at 7.49%. Underlying market and way below the US. So we could potentially see some opportunities come over the next few months, especially if you do get that first 25 basis point cut from the RBA on 18th of February. So there is actually quite a lot of opportunities that are out there for investors.
That's Zoran Kresovic from Blueberry Markets.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.